Hello students, welcome to my channel. In this video, we are going to study valuation of goodwill. Now students, let us first understand what is goodwill. Goodwill is nothing but it is just the reputation which is earned by the business. Let us take an example students. There are two shops near you. One which is very old but the shopkeeper where is very honest, he never cheats, he smilingly greets his customer. And there is new shop which is newly opened, mm, where the shop where also there also shopkeeper is good. He also keeps all the products, but people doesn't know him much because he's just newly opened. So tell me students, where people are going to go more? Obviously, they are going to approach the old shop more. Why? Because the old shopkeeper has created a goodwill in the minds of the people. Hence, the old shopkeeper is going to earn much more than the new shopkeeper because few people are going to go to the new shop also. So, students, why the old shopkeeper is earning more? Because of his goodwill. Okay, so goodwill is something which enables proprietor to earn more profit in future. That means the profitability, goodwill affects the profitability of any business. Now, students, when goodwill is to be valued, goodwill has to be valued on admission, death, or retirement of a partner, on amalgamation of firms, on conversion of partnership into limited company, or sale of any business. Because, students, if there is a retiring partner, he will ask for his share of goodwill. He will say, since I'm living here and now all the profits will be yours. So, since I have also worked over here, I have also created image in the minds of the people. My contribution is also there. So, that is why I should also get my share of goodwill. Why? Because you will be earning much more than the normal profit because of the goodwill, and hence I should get my share. So that is why here valuation of goodwill comes into picture. Similarly, students, on amalgamation of firms also, whenever there is if the two firms are amalgamating, the vendor company will ask the purchasing company, since you are going to earn future profit and you are going to earn more profit because of my goodwill of my company's name, of my company's image, that is why you have to give me share of goodwill. Since goodwill is not a physical asset, students, rather it is an intangible asset, and hence its valuation becomes a bit difficult. There are various methods of valuation of goodwill, and it depends on the business to opt or their agreement to opt on any of the method. First method is simple average profit method. Here, students, what will happen? The company will say that since now I am here what will happen, students, the company will say, since now I am taking away the business and I will be earning more profit, so that company will give whatever the agreement will be there between them, 3 years or say 5 years of profit. Okay, because now the purchasing company will be earning all the profits in the future. So as a goodwill, it is going to give 3 years average profit or 4 years average profit. That is the first method how goodwill is calculated. In the second method, again, students, goodwill is 3 years or 4 years or whatever years of purchase, next few years purchase is being given as goodwill. But here, students, while calculating average, weights are assigned, means weighted average profit is calculated. Now, students, while assigning the weights, last year's profits are assigned more weight. Why, students? Because we, for example, last year's profit is 3 lakh, then before it is 2 lakh, then before it is 1 lakh. Which profit will be more accurate? We are going to say last year's profit as the more accurate profit. So that is why more weights are assigned to the last year profits, and like that way average is calculated, and that average profit is multiplied by number of years of purchase. In this way the goodwill is calculated. Now students, see, listen here, I'm just creating a base on how to calculate goodwill. We are going to go in much detail in our next lecture, where I'm going to do a question on the methods of calculation of goodwill. Okay, then students, third method is super profit method. Students, while telling you the story about the two shopkeepers, there I have told you that old shopkeeper will be earning more than the new shopkeeper because of goodwill. So students, that difference between the two earnings is called as super profit. Means old shopkeeper will be earning super profit. And goodwill is nothing but super profit into number of years of purchase. The company will say, the vendor company will say, since you will be earning super profit, you will be earning extra, and this extra you will be earning because of my goodwill. So this extra profit you are going to pay me for these many years. For example, say 5 years, say 3 years, whatever number of years of purchase is there. So here students, we need to calculate super profit first. While calculating goodwill under this method, we need to calculate super profit. So how you are going to calculate super profit? Super profit will be future maintainable profit minus normal profit. Now what is future maintainable profit? Students, let us assume there are two companies A and B, right? Now students, company A, for example, in last year earned 1 lakh rupees. Okay, and this company A is selling its business to company B. So do you think students, in the next year, in the very next year, B will also be earning 1 lakh rupees only, exactly same? No students, it is not necessary, although the business is same, but it is not necessary that B will be earning the same profit itself. Why? Because students, here what happened, in the last year a fire broke out in godown and 10,000 worth of stock was destroyed. 10,000 worth stock was destroyed. That means students, this 1 lakh was not 1 lakh, it would have been actually 1 lakh 10,000, right? If fire didn't broke out, it would have been 1 lakh 10,000. But since because of fire, his stock was destroyed, and that is why his profit decreased and it came to 1 lakh rupees, right? That means B should, in normal course, B would be earning not 1 lakh but 1 lakh 10,000. So I'm adjusting this profit now, because this is future profit. This is just a prediction. I'm adjusting this average profit, and that is called as future maintainable profit. Okay, so future maintainable profit is that profit which the purchasing company will be earning in future. Okay, minus normal profit. Normal profit, how we are calculating? It is normal profit is average capital employed multiplied by rate of return. Now how to calculate this capital employed? Let us see how to calculate this capital employed. So students, if opening and closing capital is given, average capital employed is very simple. Opening capital plus closing capital divided by 2. If opening is given, you are going to write opening plus half of the profit earned. If closing is given, students, then we are going to subtract half of the profit earned. Okay. So this is a very simple method. If opening and closing, if opening capital is given or closing capital is given, you are going to calculate average capital employed. Then students, if capital is not given, nor opening is given, nor closing is given, how you are going to calculate? Then at that time, now students, in question, assets and liabilities will be given. So it is assets minus external liabilities. Now students, while taking assets, we are not going to take any fictitious asset. We are not going to consider goodwill. We are not going to consider non-trade investments. Only students, we are going to consider those assets which were required for running of a business or which were invested in the business, because we are calculating capital employed, means money which was invested in the business. Okay, so like that way we got capital at the end of the year. That means students, we got closing capital. What we got? Closing capital. Now, just now we studied through closing capital, how can we calculate average capital employed? How can we calculate, students? So, closing capital minus half of the profit earned during the year. Like that way, we got average capital employed. And first, we need to calculate average capital employed. Average capital employed, when we are going to multiply it by normal rate of return, what we will get, students? Why it is not? Okay, when we are going to calculate average capital employed, we are going to get normal profit. Okay, and then we are going to calculate for future maintainable profit. From future maintainable profit and normal profit, we will find out super profit. And once we get super profit, we are going to multiply it by number of years of purchase. We will get goodwill. I hope students you have understood this lecture. Okay, so keep watching my videos, and in my next lecture, students, I am going to solve all the questions related to this valuation of goodwill. I'm going to take few questions on it where all your doubts and confusions will be clear. Okay, so keep watching my channel, and if you like it, please students like, share and subscribe. Okay, thank you.